chair of the Financial Stability Oversight Council, helping to guide initiatives that promote economic growth and financial stability and American competitiveness. Joining him today is Jonathan Gould, the 32nd Comptroller of the Currency, overseeing the federal agency responsible for chartering, regulating, and supervising national banks and federal savings associations. The OCC has a really wonderful history going back to 1863, when the organization was created by President Abraham Lincoln during the Civil War. Today supervises institutions that hold roughly 2/3 of the commercial banking assets in the United States. Comptroller Gould also serves as one of the 3 members of the FDIC Board of Directors and is a member of the Financial Stability Oversight Council. Together, Secretary Bessent and Comptroller Gould are helping lead efforts to strengthen the nation's financial infrastructure, support economic opportunity, and ensure that our banking system remains one of America's great competitive strengths. So please join me in welcoming to Phoenix today, United States Secretary of the Treasury Scott Bessent and Comptroller of the Currency Jonathan Gould.
Good afternoon, and thank you, Harris. I'll also mention I began my career as a banking analyst, so I used to know how to read a camel report. And I appreciate that kind introduction, and thank you all for joining us here today. The spy novelist John le Carré, you may know him for movie book Tinker Tailor Soldier Spy, famously wrote that a desk is a dangerous place from which to watch the world. So I try to get out from behind mine as often as I can. For me, one of the highlights of my travel is seeing where policy meets people. So I was just at a local Frito-Lay plant yesterday, and it was very interesting, inspiring for me to be able to see how our tax bill that was passed last July 4th, Working Families Tax Cut, some people call it the One Big Beautiful Bill, was affecting both the plant there in terms of the immediate expensing of equipment, factory structures, ag structures, and then how President Trump's 4 signature tax policies, no tax on tips, no tax on overtime, which people in that plant really liked, the deduction on Social Security, that means 85% of our seniors aren't paying tax on their Social Security, and deductibility of auto loans of American-made cars is actually affecting that. So it's a pleasure to meet with local bankers who put the savings of community to work for those who are building its future. Of course, the community banks devote a far greater share of their assets to small business than the largest institutions. Despite holding only 15% of industry loans and deposits, you account for 40% of small business loans. Financial system that relies so heavily on local and community banks means Washington should have taken care not to weaken them. Since the great financial crisis, half of community and small banks have disappeared under the weight of overregulation. Yet in 2023, all that supervision did little to spare our country from suffering 3 of the largest bank failures in history at the same time. Dodd-Frank was supposed to extend too big to fail. Instead, it created too small to succeed. To expand opportunity for all Americans, the banks must serve Main Street the same way they serve Wall Street. Wall Street Journal called me an Ivy League populist, and I said, well, that's why you're called the Wall Street Journal, not the Main Street Journal. Sometimes you don't like my message. President Trump is determined to see that Main Street has its time now. But today, we are also here to discuss the same community ties that make local banks essential to economic growth and place them on the front lines of national security. Here in Arizona, your vigilance is especially vital. President Trump has taken historic action to seal our southern border. Still, Arizona remains uniquely exposed to the aftershocks of President Biden's border crisis, including cartels, criminal organizations that seek to conceal illicit payments, and all that they try to do within legitimate channels. So under the president's leadership, we're bringing the same resolve that secured the border now to safeguard our financial system. A recent executive order directed Treasury and our regulatory partners, like the OCC, to protect against fraud and abuse, improve the detection of illicit financial activity, and ensure that America's financial institutions are not used to facilitate unlawful conduct. We have moved swiftly to deliver on each of these directives. In June's Treasury's Financial Crimes Enforcement Network issued an advisory to help institutions identify schemes involving unlawful employment, labor brokers, shell corporations, payroll tax evasion, identity theft, and other forms of financial exploitation. And in recent weeks, the Office of the Comptroller of the Currency, led by Jonathan Gould, reinforced that work with new guidance on lending to borrowers who are not legally authorized to work in the United States. OCC's guidance advises financial institutions to identify, measure, monitor, and control credit risks through safe, sound underwriting practices that assess borrowers' willingness and capacity for repayment. Taken together, these actions reflect a broad effort to deny unlawful activity any foothold. This administration will not tolerate blatant abuse of our financial system, nor will it permit risk exposed by the extension of financial services to illegal aliens. Now, to be sure, we do not ask bankers to assume the burdens of border enforcement, but we depend on banks to do what you do best. Know your customers, identify risks as they arise, and report suspicious patterns before they metastasize into criminal schemes. This is where local knowledge, such as we have here today, acquires the force of national consequence, and is how an act of discernment in one community can help fortify the entire financial system well beyond it. At Treasury, we follow the money, yet no office in Washington can detect every dubious transaction or prevent every payroll scheme at its source. Because you know the ordinary sense of commerce in your communities, you're often the first to identify when it has been compromised. Arizona bankers, as we will hear more about momentarily, are demonstrating the kind of partnership that President Trump's executive order envisions. And by investing in compliance programs, employee training, filing suspicious activity reports, and sharing information that can prevent criminal activity, you're exemplifying the type of leadership this Treasury expects. Of course, that partnership carries obligations in both directions. We are committed to giving you tools to stop fraud before it gathers scale. And while we ask you to watch over the integrity of our financial system carefully, the work compels those of us in Washington to listen to our community bankers just as closely. That is the purpose of today's visit. It's why I'm here in Arizona, and it's why I look forward to the discussion ahead. So thank you once again for being here, for your work to widen the doors of opportunity, and for your commitment to closing the channels of illicit finance. Thank you.
Thank you, Secretary Bessent, for your leadership and for your remarks today. And thank you to the Arizona Bankers Association for hosting us. There are few better places to have this discussion than Arizona. This is a state defined by growth, entrepreneurship, and strong local communities. Community banks are essential to each of them. They finance small businesses, local employers, farms, and ranches. They help families purchase homes, build wealth, and create opportunity for the next generation. Community banks hold only a fraction of the banking industry's assets, but account for an outsized share of small business and agricultural lending. President Trump's economic agenda and Secretary Bessent's vision of parallel prosperity depend on a strong community banking system. A Main Street comeback requires a community bank comeback. Washington has subjected community banks to a regulatory and supervisory framework built for the largest and most complex financial institutions. The result since the Dodd-Frank Act has been that more than half of the community banks in the United States have disappeared. At the OCC, we have refocused supervision on material financial risk. That means spending less time on activities that do not improve safety and soundness and more time on the risks that actually matter. We eliminated examination activities that were not required by statute or regulation. That gives our examiners greater flexibility to use their judgment based on the bank's size and risk profile. We've also worked with our fellow banking regulators to reduce compliance burden by expanding the scope of banks eligible for the community bank leverage ratio and we reduce the cost of OCC supervision by lowering assessment rates. Working with the FDIC, we finalized our reputation risk rule, making clear that banks should be free to engage in lawful banking activities and serve lawful customers without regulators relying on subjective notions of reputation risk. Earlier this week, we proposed changes to our confidential supervisory information regulations that would allow banks to share information more easily in routine business matters without prior OCC approval. The current requirement creates unnecessary bureaucracy without a corresponding supervisory benefit. Regulation should be proportionate to risk. We should impose no more burden than necessary to maintain a safe and sound banking system, while keeping our focus on the risks that actually threaten it. That approach also guides our implementation of President Trump's executive order restoring integrity to America's financial system. Arizona understands why that matters. As a border state, it has seen how the consequences of open border policies can extend beyond immigration and affect local communities, the economy, and ultimately the financial system. As Secretary Bessent has said, economic security is national security. Banks have an important role to play. They need to know their customers, understand the risks they face, and make sound decisions based on the facts of each relationship. That is why FinCEN recently issued an advisory reinforcing banks' long-standing Know Your Customer responsibilities. KYC is a core part of effective risk management. Banks should understand who their customers are, how they expect to use their accounts, and whether their activity is consistent with the information that banks have collected. When a bank detects unusual activity, it should investigate and, where appropriate, report suspicious activity. Last month, we released guidance with the FDIC and NCUA, reminding banks of the risks associated with banking and issuing loans to non-work authorized illegal aliens. Our focus on credit risk is nothing new. It is a basic principle of safe and sound banking. If a borrower is not legally authorized to work in the United States, that may present elevated credit risk because of the borrower's inability to generate income. Banks should assess the source of repayment, the borrower's repayment capacity, and where relevant, collateral and other factors that bear on credit risk. They should make those determinations based on the facts and circumstances of each borrower and consistent with applicable consumer protection laws and regulations. Our job is not to eliminate risk from the financial system. Taking risks is inherent to the business of banking. Our job is to ensure banks identify and understand the risks they're taking, manage them responsibly, and make informed decisions. Our guidance reaffirms long-standing principles of safe and sound banking while providing additional clarity on how those principles should be applied today. Economic security is not an abstract concept in the communities you serve. It is a young family walking into a bank hoping to become the first in their family to own a home. It is a couple who spent 40 years working and saving, now sitting down with their banker to discuss retirement plans. It is a small business owner taking a risk and creating jobs in the town on the streets he walked every day growing up. These are the Americans our financial system exists to serve. They work hard and play by the rules. They want to build something that lasts for their children and their children's children. Under President Trump and Secretary Bessent's leadership, we are protecting our financial system from those who would abuse it and strengthening it for the Americans who depend on it. And community banks are essential to building it. The goal of our reform of community bank regulation is straightforward. We want you to spend less time navigating unnecessary processes imposed by Washington and more time serving your customers, financing local businesses, supporting employers, and strengthening your communities. That is good for community banks, it is good for Main Street, and it is good for the American economy. And now I look forward to hearing directly from the bankers on the front lines here in Arizona about what you're seeing and how we can better support your work. So I'm going to start with Ron Evans. Sir, if you could, I know you've had a lot of experience dealing with illicit financial activity, both identifying it and preventing it. So I was wondering if you could kind of comment on that as well as what more we can do at the OCC and beyond to help you.
Yes, sir. I would like to thank the Secretary of the Treasury and the Comptroller of Currency for joining us in Arizona today. Your presence and the administration's continued support of community banking demonstrates the importance of strong partnerships between financial institutions, regulators, and government. I also want to thank the Arizona Bankers Association for the opportunity to speak with you. As mentioned, I'm Ron Evans, President and CEO of West Valley National Bank. This December, our $80 million community bank celebrates its 20th anniversary. Our board of directors, employees, and shareholders are proud to serve our communities and support the vital role community banks play across America. Arizona is one of the nation's most dynamic economies, from manufacturing and agriculture to international trade, logistics, tourism, and small business. Our state's success depends on local business, and community banks are proud to help those businesses grow. One of our most important responsibilities is protecting our customers and the financial system from fraud, money laundering, and other illicit activity, including crimes associated with illegal cross-border activity. Community banks are uniquely positioned to support law enforcement and regulators while remaining trusted financial partners to our customers. We accomplish this not only through technology and monitoring systems, but something equally valuable: relationships. We know our customers personally. We know their business, their families, and their normal banking patterns. That knowledge often allows us to recognize suspicious activity long before technology alone would. For example, our lending team recently identified inconsistencies during a loan application that prevented an attempted fraud and protected the identity and business of an innocent victim. In another case, our employees recognized that a longtime customer was being targeted by an online scam. Because the transaction was inconsistent with the customer's normal banking activity, our team intervened, stopped the transaction, and educated the customer before significant financial harm occurred. In a third instance, our employees quickly coordinated with local and federal law enforcement, as well as neighboring financial institutions after identifying fraudulent activity. That collaboration helped identify additional victims, prevent further losses, and support an active investigation. It is an excellent example of what can be accomplished when financial institutions, regulators, and law enforcement work together. These examples demonstrate why community banks remain essential. We protect the integrity of the financial system while also protecting the people and businesses that make our community strong. Community banking is personal. We are neighbors, employers, volunteers, and trusted advisors. We understand our communities and the risk because we are part of them. We are proud to partner with the administration, regulators, law enforcement, and our fellow financial institutions in protecting our financial system and the communities we serve. Mr. Secretary, Mr. Comptroller, thank you for your leadership, your partnership, and your commitment to community banking. It is a privilege to stand with you today.
Thank you very much for sharing those success stories. I'm going to turn next to Mr. Pete Hill. I know in our roundtable earlier today, we were talking about some of the modernization efforts that the Secretary and the OCC and other federal banking agencies have been implementing. I'd love to hear how they've affected your bank and what more we can do to support you.
Yeah, certainly. Thank you. And thank you both for coming out and listening and being with us today. I did want to just relay a short story. About 18 months ago, I attended a CEO forum in the Western District office of the OCC in Santa Ana. And it became immediately clear to me that there was a change that I had not noticed before. And it goes along with this Community Bank Comeback Initiative. We've always had a great relationship with that office over the years. The tone and tenor from that office, even with leadership changes, has been very consistent and very positive. We have a collaborative relationship with them. It's important that we've got consistency in the examination process, that we have regulatory responsiveness, and we do get that from the OCC, and then just clarity along the way. And I wanted to point out to a couple of things. It's important for a small bank like Goldwater. We were founded in 2007. We'll celebrate our 20th year next year. We've grown at about a 22% per annum rate on total assets over the last 5 years.
And it's important for us to fund our balance sheet and be available in the community. And this change that is led by Secretary Bessent and Comptroller Gould has been very positive for us. If we are not a reliable provider of credit in the community, we're not serving our purpose as a community bank. Two examples of that: as we grew, we evolved from a small bank category for CRA compliance to an intermediate small bank. And that was a big change. Prior to that, we were really measured on the lending test, which is low to moderate income mortgages. And we have a lot of DNA and legacy and history in our bank with mortgage lending. That was easy. I visited with the folks out of the Western District. We needed a little bit of help to make that transition. They brought experts in, visited with us, educated us, and gave us an extension on the timing of our CRA exam. And what that's allowed us to do with this change in approach is meet all of the 4 prongs of that intermediate small bank test. We've made an investment in the clearinghouse CDFI, where the former, still current Arizona Multibank is ingrained. We've done development lending to clearinghouse CDFI. We made an investment in a bond issue supporting low-income multifamily housing here in the city of Phoenix. And what's exciting to me is we, through CDFI, have a couple of opportunities to serve on committees for that CDFI with a couple of our executives from the bank. Our chief financial officer will go on to their ALCO committee, and our chief credit officer will go on to their asset committee. So that collaboration was very apparent to me in that CEO forum, and it's been followed through very nicely. The other example, talking about funding of our balance sheet, we've had to get a little bit creative and aggressive on deposit products. And we've had good success with that, but a lot of consultation with the OCC, a lot of challenges about some of our products, a lot of questions that we got through, but they were very supportive. They understood what we were trying to accomplish and helped us with some of the analytics policies behind it. So that resource has been available to us. So we thank you for that, and we appreciate it. Yeah, it's been great.
Well, thank you very much for that. Just last Friday, we proposed some additional changes, we in the FDIC, around the Community Reinvestment Act framework. So look forward to hearing your comments on that. But certainly, I think it's our collective view that community banks exist to serve the credit needs of their communities, and they shouldn't have to spend an undue amount of time demonstrating that they do, because that's the reason for their existence. So we're trying to make common sense reforms to that too.
Thank you.
Last but not least, Mark, first let me thank you again for hosting us in this beautiful office. So thank you for that. I know we were also talking earlier about financial literacy efforts, so would love to hear some of those underway.
Yeah, so thank you, Mr. Secretary, Mr. Comptroller, again for coming to visit us in Arizona in August. It's a pleasure to have you. I'll reiterate that again because we're just so pleased. So helping our community with financial literacy is at the core of all the Arizona bankers, and we recognize the importance to our long-term and economic security by teaching financial literacy. And so we appreciate your continued heightened focus on this topic. Our public-private partnerships involving Treasury, OCC, and community organizations can help expand financial literacy efforts to promote market-based capitalism and improve outcomes for everyone. The banks in Arizona are highly focused not only on fraud awareness, we're also helping our customers and constituents and community members on budgeting, saving, using credit responsibly, home ownership readiness, prepping them to buy a home, meeting with them before to tell them what it's going to take, what you have to do to buy a home, and trying to provide that education. Same thing with starting a business. We have several SBA lenders in here, and I know a lot of the banks do SBA loans. We try to educate our clients to be prepared to get an SBA loan and open that business, and we spend a lot of time doing that. And then, of course, retirement preparation. As people age, how can they invest their money? How can they make their money last through retirement? And so the Trump accounts, as we had talked about before, are a great way to encourage saving and asset building over the long term, but early on. To date, more than 7 million signups for the Trump accounts and 1.5 billion have been deposited into accounts. So clearly the Trump accounts are getting great traction. And, you know, I think banks are now well positioned to start support the scaling and of this historic initiative, and more broadly, continue financial education and savings initiatives. So we appreciate your support and collaboration with our financial literacy efforts. Financial inclusion and economic opportunity are strengthened when customers have access to trusted financial education, state financial products, and long-term savings opportunity. And I will say, with all the member banks in this room, we get back to KYC and what we've talked about before, we really get to know our customers. And we're not trying to sell our customers products they don't need. We're trying to sell them products that we think can genuinely help them. And so they're not a number to us. We are all in this room, definitely out in the community, trying to make a difference for our customers and our communities. So with that, we are all proud and committed to educating our communities and excited to build on the momentum we have in helping our communities on this front. So thank you again for your support and continued advocacy for financial education.
Well, thank you all very much, both the panelists, the bankers on this panel, as well as all the bankers in the room for doing what you do every day to support your communities. I'd also like to thank the Treasury Secretary for being here. I will say that we are very lucky as a banking system to have a president and a Treasury Secretary for the first time in a very, very long time who both care and understand the importance of the banking system as a whole and the role that community banks play in particular. And so with them at the helm, I'm very lucky as a regulator to be able to take the common sense reforms that we've taken over the last year plus and that we will continue to take to fuel a community bank comeback and to restore banks to their proper role as financial intermediaries again to drive economic growth in this country, both in local communities and throughout. So thank you all, and thank you everybody in the room.
Thank you. On behalf of the Arizona Bankers Association and our member banks, thank you for joining us. Thank you, Secretary Bessent. Thank you, Comptroller Gould. And thank you to our guests for being here today. And please join me in thanking once again the Secretary and the Comptroller.